The pound is naturally very volatile at the moment. 3 weeks to go until the 31st of October, Brexit deadline, and still we don't know exactly what is going to happen. Are we going to have a deal? Are we going to have a no deal? Or is there going to be another extension? There's still a lot of unknowns. Everything's still up in the air, and that naturally lends itself to a lot of volatility in the currency. Now, over the last few weeks, the pound has been softening. The reason for this is quite simple. While the Parliament did secure an extension bill, which ensured that if by the middle of October no deal has been agreed and supported by Parliament, then the Prime Minister is forced to request an extension. There is suggestions that Boris Johnson will find a way around it. He has continuously said that he is committed to leaving on the 31st of October, deal or no deal. So this kind of confusion has lent itself to a little bit of weakness in the pound. The fact that these negotiations as well with Brussels does not appear to be running smoothly isn't helping matters either. We've seen the proposals which Boris Johnson has put forward, and as far as Brussels is concerned, there is a lot of concerning issues, the latest of which following a phone call with Angela Merkel earlier this week, when she effectively is reported, based on leaks from within Downing Street, to have suggested that unless Northern Ireland signs up to the currency union with the rest of Europe, then a deal is not possible. And again, that did act as a drag on the currency earlier this week. But around 122 against the US dollar, as you can see on the chart here, we have seen a little bit of a bounce. Now, 122 isn't just a major round number, it's also a key fib level from the most recent lows a couple of months ago to the most recent peak a couple of weeks ago. So we've seen a little bit of a rebound off this level. That's not necessarily a sign that we are seeing a reversal necessarily, but it could potentially be the start of one, depending on how the next week or two goes. I do feel like the sell-off that we have seen in the currency, the fact that we haven't retested those lows around 120, does suggest to me that there is a confidence, or at least a suggestion in the markets, that they don't believe no deal is going to happen. The risk, of course, is still there, but the belief isn't necessarily backing it up. Perhaps they see traders see too many ways in which an extension or a deal can be secured, and still see no deal as a smaller possibility. And that's why we're seeing this bounce around 122. Whether it can be sustained, of course, into 123, 124, we'll have to wait and see. If we break below 122, then again, we will have eyes on those most recent lows around the kind of 120 levels. And again, a lot of headlines we're going to see over the course of the next few weeks as we approach the EU Council meeting next week. Of course, there's going to be more negotiations over that period. The weekend, of course, is also a very busy time as far as the politicians are concerned. So we're going to get a lot of Brexit rhetoric again over that period. So it's certainly going to be interesting in this cable pair. The closer we get to that deadline, the closer we get to the summit, and the more we hear about no deal, the more we could potentially see that drag on the pound. But at this moment in time, there is that little bit of confidence there, it seems, from traders who just don't think that no deal is going to happen.